Hello and welcome back to the PJ Trades Review Series, where I go over my daily trades that I take with my premium members, and I give it to you guys here free on YouTube so you can go and study what we're doing. Now, today was one of, I think, the most exciting sessions of the month, because it was one of those sessions where you kind of had to grind it out. And the first trade, which I'm going to show you guys, which is a break-even trade, was a really good break-even trade. It was a great idea to go break-even when we did, and I'm going to show you guys why. And then the second trade, the word that comes to mind was patience and discipline. After we took that first break-even trade, the next trade ends up being a beautiful, beautiful setup. So, guys, all I ask with this review series, again, like, comment, subscribe to the channel. Let me know that you guys are gaining value from this stuff, and I will continue to do this for you guys free of charge. Now, no more yapping. Let's get on into it. TurboTax presented by Tostitos, the chip company. So, coming in to today, let's get some framework done. We know that today is FOMC. Right? And FOMC day, notoriously in the morning session, is usually pretty bad. Now, one of the things that I try to do on FOMC day, I don't know why it's a tongue twister, but I like to be done early, because the longer we go into that AM session, the worse the price action ends up being, because the closer we're getting to a major news release at 2 o'clock. Okay. So if you guys are completely new, FOMC is basically the day that the Federal Reserve gets together and says, hey, we're going to cut interest rates, or we're going to keep interest rates, or we're going to raise interest rates. So it's a very big news release, and the entire country waits to see, and world, what Jerome Powell will do with interest rates. So with that being said, that is the fundamental side of today's session, but I'm going to break down the technical side of why we did what we did and how we got rewarded for it. So today's first trade setup of the day was this right here. Okay. Pretty simple. It was a 2-minute inverted fair value gap setup. So I could just bring back price so you guys can kind of get an idea of what I saw. So this was executed on a 2-minute time frame. Now, if we look at the higher time frames here, this market does not look good. 50-minute looks really sideways, but I am leaning short because of the 1 hour looking bearish, because of the 4 hour respecting this bearish fair value gap here. Okay. So I am still seeking lower prices before I even look to go, for longs again. So I want some of this lower liquidity to get cleaned up. So we got New York AM, this is New York AM low down here. And then we do have some other old draws on liquidity that have not been cleaned up yet, like another New York AM low. So the market, in my opinion, still wants to drag lower. So I'm on this session, I'm looking for some kind of short trade. So if we drop back down to the 2-minute time frame, and I could give you guys the framework behind this, the market puts in an external buy side liquidity point here, right? So the market comes up, it sweeps it. Now, I don't remember if ES actually formed. Oh, it did. There's another reason why I like this. There was an SMT at this swing high. So you can see here, we'll let price kind of move forward. Price sweeps this buy side liquidity point right here, right? Buy side gets swept. Look at ES. We have no sweep of buy side. This is an SMT, guys. This is a correct SMT. For your SMT fanatics, this is the reason why I was looking to take this market short today, okay? We get this really clean SMT at this external high, which is also a 4 hour fair value gap, which I showed you guys before, okay? So we are looking for a V-shaped recovery out of here, SMT, right? And now I'm looking for some sort of gap to take this into our first draw on liquidity, which would be this area here, which is going to be my break-even point and TP1 for a scale. And then overall draw on liquidity, which would be this New York AM low down here, okay? Pretty simple, pretty straightforward, nothing crazy. Now, if you guys do not have TradingView Premium, I suggest you get it, because it's great to be on the 5-minute, the 2-minute, the 1-minute, but the 30-second time frame today, man, if you didn't have the 30-second time frame, you are probably very confused why price kept on bouncing from this random area. Okay. Here's the 30-second time frame. Okay. Here is a 30-second fair value gap that this market puts in. It's a 30-second bullish fair value gap. Watch how strong this gap was all day. And here's the reason why we took a break-even trade today. After we get this beautiful SMT, buy-side liquidity gets swept in the V-shaped recovery here, okay? And then the inverted fair value gap. So we enter on a short just like this, and I am running a flat 20-point stop here, right? Flat 20-point stop, targeting buy-side liquidity down, targeting my first external low and my overall draw on liquidity for 62 points. So 20 points to make about 62. So we get the inverse, and then what happens is this 30-second fair value gap, man, it was the strongest 30-second I've ever seen. Watch how many times this 30-second just holds. 1 time, 2 times, 3 bounces, 4th bounce. Now, I didn't even let this trade get to over here. I didn't wait for this to happen. After I believe it was this bounce right here, I took a break-even trade. I believe we went into profit just like this. This stop got slammed to break even because I spotted that 30-second gap being a hindrance to this short. Okay? And I protected capital and we took a break even. Now, this trade would have been an absolute winner from here if it would have flipped the 30-second gap. So what I'm doing here is I'm reading what these fair value gaps are telling me. We get a 2-minute inverse. That's great. Fantastic. On the 1 minute, there's a tiny little 1-minute gap here. It's not even really, I'm not even going to mark it out. It's so small. But on the 30-second, that's where this gap comes into play. And in order for this trade to work correctly, it needs to flip that 30-second gap to the downside, right? So that doesn't happen 3, 4, 5 times. I know that this trade is not going to work and we have to cut this and we're out. So this trade, in my opinion, was a great break-even trade because watch what ends up happening. This 30-second just continues to hold and this market wants to continue to run up from here. So trade number 1, break even. In my opinion, this is a fantastic break even and a great read as to why the trade was not working. Okay, the whole trading floor was super appreciative of this being a break even trade. People that didn't have the 30-second time frame didn't even see this, but I have it, thank goodness, because I really, really love the 30-second. So we take a break even. Now, moving on to the rest of the session. Moving on to our next trade, which is an absolute beautiful banger, okay? I'm just going to get price moving and grooving here and have this all marked out for you guys so you guys can see what I took next. So, trade number 2. Trade number 2. Let me just get it fully played out so you guys can see the breakdown and see why we took it. Now, trade number 2 is executed on another 30-second time frame. Okay. What happens here is that the market finally comes up and really digs higher, just missing a 15-minute FEG and a 1-hour FEG, just missing the fill. Okay. But what I really like about this is that we're getting a strong V shape out of here. Now, if we hop on ES again, what do you know? Another SMT. Okay, so the market's telling me something again, like, hey, we might be in for another reversal, another shot at taking this thing short. Okay, so ES fails to take a swing high, NQ takes a swing high, and now I'm looking for a possible trade from here. Okay, so this trade is executed on the 30-second, and we're going to break it down right now. Okay, so if we bring price back, we can see the market draws higher, forming this SMT at the high, and leaves behind an good old 30-second fair value gap right here. So this is a 30-second fair value gap, okay? And at the same time, I'm going to delete all these markups for you guys. At the same time, we realize that this market is leaving behind a lot of low resistance liquidity, right? It's building up these orders over time. Consolidation and wicks in this range, all of this is low resistance liquidity. So we're building up this low resistance liquidity. And sometimes I like to call it channel liquidity because this is actually a channel. And now what I'm waiting for here is a 30-second flip. A 30-second flip targeting draw 1, draw 2, and final destination being that 30-second FEG. Okay? So this one ends up being really, really textbook. Again, Don't forget SMT on ES and QSMT. Market comes down. Nice change in the state of delivery right here. Okay, there's your CISD that we get for change in the state. Market pulls back into the 30-second inverted fair value gap, which is our inversion gap. We take an entry right here. Now on this trade, we ran, I believe it was another 20-point stop. Stops right above the swing high here. And targets were going to be, I believe we were break even here. Yep, break even at this swing low. And then full TP at this 30-second fair value gap that was still holding. I didn't want to mess with that gap again. So I wanted to take a trade into that 30-second gap. That's it, man. That was it. Pretty simple. Another day, another inverted fair value gap setup. And the key to this setup, guys, is another SMT, okay? And the LR that the market built up from 10:30 to when we entered the trade around 11 o'clock. Now, we took this trade at 9:53, at 10 a.m. basically. And we didn't get involved in any more crap or chop. We waited for a nice clean setup right around 11 o'clock. So it was about an hour between trades. And then found this clean inverted fair value gap setup. So this trade ends up working fantastic. And we end up getting a true 45 points, 40 points, depending on where you got your scale off. But again, look how this 30-second fair value gap held price up all day. I mean, 1, 2, 3, 4, 5, 6, 7, 8 times the market couldn't break through it, right? So I was not willing to say, hey, let's go for below that. As soon as we get back into that area, that's 45 points. We're done and dusted. And it was a really, really fun trading session, guys. It was great playing defense over here, getting that read on the 30-second and getting out and taking a break-even trade and then waiting for an even better trade setup. And sometimes, guys, that's what trading is all about, man. It's about fighting. It's about recognizing in the middle of your trade that something's wrong. A lot of people out there will tell you, just set it and forget it. Just set it and forget it. When you're trading ICT like this, and you can be so accurate in your trading with the lower time frames, we're like surgeons, basically baby surgeons, going in there and seeing that something's wrong in the market, identifying it in real time that no, this needs to flip in order for this to still be valid. That saves us so much money. A normal trader that just does a set and forget here takes a full 20-point stop out. But today, because of that and that realizing that that trade was not going to work, we take a break even. So I am a true believer in managing the position, because with the way that we trade, we can really read the market. Like, we can read what's going on in the candle closures, and the fair value gaps, inverted fair value gaps, give us so much guidance in our trading that we know when to close, when to hold, and that allows us to catch longer moves when the confirmation is clear. So that was today's session, man. A break even and a banger 45-point trade. That's it for me for the month of July. Wrapping up a 320-point month of July, man. It's been a crazy July and June. You know, after this video, I'm heading out to Vegas, and I'm super excited about it, guys. So thank you guys so much for supporting the channel. I always appreciate you guys, and I'll see you guys in the next trade review. Peace out.